Renewable accounting, auditing, stewardship. Okay, what is the meaning of stewardship? Steward means a person who is going to take care of your belongings and the person who will take care of your things, and he will report to you on what is wrong in your things. So before we study about auditing stewardship, tell me, who are the people who are interested in the financial statements of the company? So we have the shareholders, directors who are interested in the financial statement of the company. So basically, our shareholders and our directors, as well as the auditor, they are interested to know if my company is operating legally and whether the financial statements of the company, it is providing accurate information about the things that happened in the company, whether the financial statement is providing accurate information about the books of accounts of the company. Shareholders and directors are very much interested to know if the company is operating legally. Auditor will check whether the shareholders will check whether the directors are operating the company legally, and he will report the same to the shareholders. Now, who are my shareholders? My shareholders are the people who invest their money to form the company. They are many people who pool together their funds with which the company is formed. Shareholders invest money in the business. However, they do not manage the day-to-day affairs of the business. They do not take part in the day-to-day affairs of the company. So, on behalf of the shareholders appoint directors, where they will appoint the directors in the annual general meeting through voting in the annual general meeting, and these directors will take care of the company. Shareholders want to know if the company is operated legally by the directors. And who will check whether the directors, whatever the directors are saying is correct? Auditor. Auditor will check what the director is saying, and he will report it to the shareholders that what the director is saying is correct. What is the role of my shareholder? So what is an AGM? Who is appointed as a director at the AGM? Any person who gets the maximum vote by the shareholders are appointed at the AGM as the directors. Okay. Now, what is an AGM? AGM is called the annual general meeting. Annual general meeting, it happens once in a year. Key issues, what are discussed in the annual general meeting? In the annual general meeting, we discuss about the key issues that affect the governance of the company. Okay, now what is happening is that in an annual general meeting, three things definitely happen. What are the three things that definitely happen? We appoint the auditor of the company. An auditor of the company is the person who will check whether the financial statements that is prepared by the directors is true and fair, or it gives a true view, it gives a fair view about the books of accounts of the company. If the financial statement gives the true and fair view, the auditor will issue an unqualified report. If the financial statement does not give a true and fair view of the books of accounts of the company, then the auditor will issue an unqualified report. Now, company is owned by the shareholders. It is run by the directors, and the shareholders want to know whether the directors are giving a proper view to them, a proper picture of the company to them. For this purpose, the shareholder will appoint the auditor. Where will they appoint the auditor at the AGM? So every year there is a meeting that is held of the shareholders once in a year, and they discuss about the key issues that affect the governance of the company. The first thing they discuss is or they do is they appoint the auditor for the company. They approve the dividends that is proposed by the directors, and any charitable donations, if it has to be given, it is discussed in the AGM, approved by the shareholders, and then the thing goes ahead. However, the company law has a provision that if over and above the AGM, shareholders feel that the company is not operating legally, or there are some things that is happening which is disapproved by the shareholder can call for an extraordinary general meeting, EGM. An EGM can also be called by the directors to discuss on certain important things that they cannot decide on. Okay. Now, shareholders, they appoint directors, and directors act as a steward of the shareholders' investment. What is a steward? Steward is someone who is appointed to look after the money belonging to the another. So the directors stand in a steward position. So directors have some roles, they have some responsibilities as a steward. So what is the role of director as a steward? As a steward, directors hold the trust of the shareholders. So they must take care of the shareholders' investment. Second role of director as a steward is they must provide report to the shareholders on the company's performance, on the future plans of the company, and they should also recommend an appropriate rate of dividend. The future company's performance is given in director's report, and future plans of the company is given in the strategic report. How about appointment of the director? Director is appointed in the AGM by vote for a set period. Whatever number of years that we appoint the director for is given in the Articles of Association. After the expiry of this set period, my director can apply for re-election, and the re-election will also happen in the AGM. Now, my director has certain responsibility. His responsibility as a steward is that he should take care of shareholders' investment and he should give report on three things. His general responsibility is that he should ensure that the documents are prepared in accordance with law and accounting regulations. He should also ensure that the documents are also published in accordance with law and regulation. So he should ensure that the documents are prepared and published in accordance with law and accounting regulation. Which documents? The statement of profit or loss, statement of financial position, statement of cash flow, director's report, and auditor's report. So the director will ensure that these things are prepared and published in accordance with the law. The documents must be sent to the shareholders in advance of every AGM. Okay, so that the shareholders can read, analyze, and have points to be written which they can discuss. What are the contents of the director's report? The director's report has the contents of, it has the names and responsibilities of the director. It has the proposed dividend. What is the political donation? Statement of confirmation that whatever documents are given by the directors are audited, and it also contain details of some adjusting events. What is a strategic report? Strategic report is a report that is given by the director stating the fair view of the business, description of the main risk and uncertainties that the business is going to face in the future, and analysis of key performance indicators. These are the things that should be there in the director's report. Now, auditor. We have two different types of auditor. One is internal auditor, one is external auditor. Internal auditor is the employee of the company who is appointed by the director. However, my external auditor examines, he is not the employee of the company and he is an independent person appointed by the shareholder. Internal auditor will see the control system that is in place in the organization. He will evaluate the information system and he will do tests, anti-fraud measures. He will see, he will do tests whether the anti-fraud measures are in place. The external auditor, he is not the employee of the company appointed by the shareholders. He is an independent accountant. His work is only to ensure that the financial statement that is prepared by the directors gives a true and fair view of the state of financial affairs of the company. What does the external auditor ensure? He will ensure that the financial statement that is prepared by the director gives a true and fair view of the state of financial affairs of the company. External auditor will prepare the audit report to state whether the financial statement that is prepared by the directors gives a true and fair view of the financial affairs of the company. Audited annual accounts are given to the shareholders and debenture holders. Who is an auditor? Auditor is a person who is appointed by the shareholders. He reports to the shareholders on four things. First thing, whether proper books of accounts are kept. Second thing, whether the financial statement represents and gives the proper picture of the books of accounts. Auditor's opinion whether the true and fair view is there, true and fair view of the profit and loss account, statement of financial position, cash flow, and director's report. So auditor will give his independent opinion, and he will also report to the director. He will also report to the shareholder that the accounts, whether the accounts are prepared in accordance with the Companies Act and IAS. If the auditor feels during his audit, during his checking, that the going concern assumption that we normally follow while preparing the books of accounts, if the auditors feel that the going concern assumption is dependent on bank loan or taking too much of money from the overdraft, then it is the auditor's duty to mention this fact in the report. Okay? Report where he will report to the shareholders. What will he report to the shareholders? That the going concern is only because of the loan. If the auditor feels that the director's report has misleading information, he will go and report it to the shareholders. What is the five common duties of the auditor? What is the five common duties of the auditor? He will report whether the books of accounts are kept, whether the financial statements is in accordance with the books of account. He will give an opinion about the true and fair view of the books of account, whether the accounts are prepared as per Companies Act and IAS. He will check the financial data. He will examine the accounts. He will review the security of the assets. He will comment on the true and fair view, and he will ensure that the company's director comply with IAS and company law. Why auditor providing a true and fair view is important for a shareholder. Any shareholder would want that that their money that is managed by the directors and reported by the directors is in safe hands. If the auditor gives a true and fair view, means the statements are free from misstatements and the financial statement represent the proper financial position of the company. The shareholders of the company will have confidence that the report confirms accuracy if the auditor gives a true and fair view. If the auditor gives a true and fair view of the financial statements, the professional opinions is trusted by others as the auditor is an independent person. If the auditor gives a true and fair view, the share prices might rise and the shareholders may be encouraged to invest more Lenders will also be willing to lend in the business, which will improve the potential profit. So only the statement given by the auditor that the financial statements are true and fair, these things will happen. What is a distinguish between a qualified audit report and the unqualified audit report? Distinguish between a qualified audit report. A qualified audit report is issued when the auditor finds one or more material misstatements or errors. Unqualified audit report is issued when the auditor finds no material misstatements or errors. If he finds that there are no misstatements in the financial statement, it indicates that the financial statement presented fairly in all material aspects. It is a clean report. It indicates that the statements are free from errors. Unqualified report indicates that the financial statements are not presented fairly in all the main aspects, okay, and in accordance with the applicable financial reporting framework. A qualified report indicates that there is a problem or issue with the financial statement and it requires investigation. Any auditor giving a true and fair view is very important for the company. And if the auditor gives a true and fair view in his audit report, the financial statement becomes valid. But when will the audit report be valid and when will the audit report be invalid? Audit report will stand completely invalid if the person who makes the audit report, if the person who makes the audit report is my relative, is the person who makes the audit report is not competent, if the person who makes the audit report has no skill, has no experience. So audit report is valid if it is signed by the auditor. Auditor is qualified and auditor is independent. Independent, that means he has no relation with the company. If the auditor is dependent on the company or has any relation with the company, then the audit report will be considered as not reliable. This is the entire theory part of auditing stewardship. Now, there are some sums which comes in auditing. And the types of questions that comes in auditing stewardship. You can pause, write your answers, then you can check your answers from here. 5 duties of an auditor. What is meant by a qualified audit report? Explain with reference to international accounting standard what adjustments have to be made to the financial statements. What is the importance to the shareholders of auditors giving a true and fair view? When do I say that the audit report is valid? So these are the sums that comes in auditing stewardship. There is another type of sum. You have property, plant and equipment, ordinary share capital, share premium, retained earnings. This is a draft profit that is given to you. You have to explain what is meant by right issue. You have to prepare a statement of changes in equity. State what is proposed dividend, how would it be treated in the statement of financial position. Differentiate between an adjusting and a non-adjusting event. Explain with reference to IAS 10 how this should be dealt in the financial statement. It's about impairment. I'm so sorry.